and I focus primarily on the eastern half of the United States. So you're all out there. I'd love to chat further about what these findings and results of the study mean. And yeah, that's
Perfect.
about all I have.
That works. Give you some context too of why the heck we're talking with you all today. The Farnsworth Group, as Katie mentioned, was hired on to do some primary research. And in fact, that's all that we do. So we are a custom research firm, and for 30 years have served exclusively the building products, hardware, home improvement industry. So this is the world with which we live. Our job is to get deeper insights to our clients' customers, their product, their brand. We work across both manufacturing channel as well, obviously, as association. So have a real good foundation in this industry. Happy to chat with you, not only about some research needs if you have them, but always love chatting about the industry. I know both Jay and I will be at the hardware show along with some of our other colleagues here in a few weeks. If we're not in your market, we're oftentimes at some of those bigger trade shows. So again, please reach out to either Jay or myself if you have questions, want to chat again about research or just industry events that we may be at and what we're seeing in the market. Okay?
Great. And on that tone of discussions, folks, if you have a question, please utilize the chat function. Love to answer and address any questions you have. So if you look in the bottom, depends how you're set up, select chat and submit your question, and we'll do our best to answer and address it.
Thanks, Jay. I almost completely forgot about that, so I appreciate you mentioning it. All right, let's start digging into some of the information. So the objectives of the study, benchmark. Okay, we're going to be doing this every year. So WDDA is investing on behalf of its dealers and the industry to understanding each year the competitive landscape, brands carried, unique positions that dealers are offering versus, maybe lumber yards, et cetera. Again, I want to caveat that this is the benchmark study. So we don't have 5 years of trends that we can look at. We will have those going forward, okay? The study did talk with 100, window retailers, replacement dealers, 100 lumber yards that are carrying windows, and then almost 20 wholesalers. Okay, so representative of our industry and those that are responsible for a good share of volume of windows and doors. Before I get into the results from the survey itself, I want to touch a little bit on what's happening in the housing market. So as I mentioned, the Farnsworth Group is focused in the building and home improvement space. There are some macro dynamics that we always look at to understand where the market currently is and maybe where it's going. So thought we would cover some of those today as context for the research that we conducted for WDDA. There are a few, we'll say 8, that are pretty standard, what we would consider maybe macro drivers. Things that year in and year out have an impact on either new or existing home sales, construction, et cetera. On the left-hand side, one of the things that we look at is household growth, household formation. Key metric when we start thinking about demand. Typically, our country sees about 1.2 million households each year. That drives demand both for existing, new, but it also drives demand for rentals. Okay, this is people moving out of their parents' basement. It's kids turning 22 and starting their own life, whatever the case may be. It takes into account births, deaths, all this fun stuff. The good news is that household growth number is up to about 1.4 million. So the demand is certainly coming back on board. The last few years, we were below 1 million. That was very, very concerning because the demand was staying at bay. Finally, in 2018, we saw it reach a little bit above normal standards, which is great news. We anticipate it being pretty strong in the near term as well. Unemployment remains really, really low, which is a positive thing for those of us that want jobs and want good pay, but it can also be a negative because if we look at the construction unemployment, it's at the lowest it's been since the peak of the industry back in 2004, 2005, right? A good news, bad news story because not having labor drives up those labor costs. With that is labor participation. Those able-bodied adults that are able to work but are sitting on the bench. Right now, our labor participation is a little bit lower than historical norms. We were hoping, maybe expecting, that as the market started coming back, some of those people would come off the bench, re-enter the workforce, and hopefully some of those would come into construction. That hasn't necessarily been the case. It's been pretty flat for the last few years. Okay, so certainly still a challenge on the labor side of things. Household income is continuing to go up, maybe not as quick as we'd all like or expect coming out of a recession, but household incomes are increasing, at least on a national broad level. Median home value. So this is definitely something that can vary greatly from market to market, but as we think about it nationally, we've got some mixed reviews on this. The median home value for new homes is starting to come down, which is good because we've had a lot of pressure on moving new housing stock. However, the price on existing homes continues to go up. This certainly puts a challenge on existing home sales, which have slowed down. Also with that are interest rates. Interest rates continue to rise. They are still below, I would say, norms or historical norms. So interest is still relatively low. The danger is that when interest rates rise, they cause a short-term effect in the consumer's mind. There's a little bit of hesitation on taking on a new mortgage once they see those rates going up. Again, long-term, it's usually fine, but it has that short-term negative implication. Last two, housing affordability. So as interest rates rise, as home values rise, that affects the ability for the average homeowner to buy the average home. It's still above normal, so that's good, but it's the lowest it's been in 10 years. So housing affordability is one thing that we want to be looking at very closely because it plays a role into that last one, which is existing home sales. Existing home sales actually declined for the first time in several years. Okay, so people are moving less, and we'll touch on that here in a minute. Other things that we look at are some of those factors that may come and go over time, but that can impact our industry, both new as well as existing. Housing inventory right now, the supply of homes for a healthy market is 6 months supply. We're now seeing that on the new housing side. So that's a good thing. We've got good supply on the new home side, which is helping bring those prices down. We are very much underbuilt when it comes to affordable new homes. Having more inventory drives down that price, so that helps a little bit. However, the supply of existing is still low. We're at about 3.5 months nationally. Again, it's going to vary market to market, but nationally we're around 3.5, which is low. We don't have enough stock. That's keeping those prices high on existing homes. Home ownership rate is going back up. It was in a trough for a little bit. We're now seeing it reach back to historical norms. It's not going above that. Not sure that it will, but we're at least back to that 65%, 66% range that we're typically used to as a nation. Labor, I'm not going to beat this dead horse. How tired are we all, Jay, of hearing about the labor challenges in the market, right? We know that they're there. They don't seem to be going away anytime soon. This labor conversation is probably having a greater impact on process, the building process. If y'all haven't started having conversations around offsite construction, modular, talking with companies like Atera or Blue Home, I would encourage you to do so. We're seeing more and more of that, and a lot of it is being done as a solution to some of the current labor challenges, finding good skilled labor at an affordable price.
Indeed, Grant. That was a big conversation the last couple of years at the Builders Show, where labor, where you're right. I think it's starting to be addressed by some of the manufacturers and builders.
Yep.
Coming up with products that require less time or offsite building. So for me, it's exciting to see how some of these problems or challenges are being addressed.
Absolutely. And I think it's glass half full, right, Jay? I mean, this is a big opportunity because all those companies still need partners. They still need suppliers. So
exactly.
Some good opportunities with labor, but it still remains a big challenge for our industry. Similarly with material prices. In the last few months, been some mixed results. Some of the commodities are coming down in price and continue to go up. Over the last couple of years, however, the trend is up. I don't know if you all have heard, but there's a little bit of a whole tariff battle going on. A lot of folks are just waiting to see what happens. But in the meantime, contractors, dealers, distributors, a lot of folks in our industry are trying to protect themselves and at times just overpricing just in case. Okay. The last one there I want to touch on is mobility. Mobility rate is the rate at which people are buying and selling homes. Historically, this mobility thing has been tied very, very closely to home improvement activity, right? When are the two biggest times that you do work on your home? Historically, it's when you sell it or when you buy one. What's happening now, because of some of the pressures we already mentioned, high home prices, lower affordability, low inventory, people are not moving as much today as they were even a few years ago. Right now, the average time a homeowner spends in the home is 10 years. A few years ago, it was 7. That's a big, big shift, right? People are staying in the home. I believe this time it's more out of choice as opposed to in the recession, they were forced to stay in their home. They lost all the equity in their home and they just did some repairs to keep it afloat. This time round, equity is still there. So home improvement activity is still happening. People just aren't moving as much. Okay, so a little bit of background. Hopefully I didn't labor on there too much, no pun intended, but I think it's helpful to understand what's going on in the market today to understand what our role is and where our opportunities lie. All right, forecast. So when we think about some of those opportunities, let's look at the housing start forecast. In 2018, we did right around 1.3, just a hair over. That's both single family and multifamily, right? When we look at the forecast for 2019, 2020, we see what I would consider to be flat, right? We've even talked to some chief economists that are saying maybe it's a little bit of a down market for this year and next. But I think flat is a safe assumption. This isn't a negative, right? We're still going to be building 1.3, but if you and your business are relying on new housing to grow by 10, 15, 20% to achieve growth in your company, be very, very mindful of that. In your market, that may be the growth that is going to happen. In other markets, it may be not. So again, I would encourage you to dig specifically into the markets that you serve to see if you fall in this flat prediction. Maybe you're a little bit higher, maybe a little bit lower.
Indeed. Grant, one thing stood out to me in some of these conversations we're having with economists is when you start thinking of a potential flat or downturn, is more the shift from high price point homes to lower price point homes.
Yeah.
So from a window standpoint, let's be aware of that as we start thinking 2-3 years out. Is there a shift in windows of wood, vinyl, aluminum, whatever that is, and how that affects the price point? And just be aware of that it's more of a potential shift as
That's
much as a flat to downturn.
That's a great point. Well, we saw that in luxury market already starting a couple years ago. When you look at markets like Miami and Vegas, some of those flips that used to be multi-million-dollar flips and some of those, multi-million-dollar bids. I'm not talking uber luxury, the 30 millions, those cats are safe, right? But, those $2, $3, $4 million homes in some of these markets have actually decreased in their value. They just can't sell them. So Jay, I think you bring up a really good point again that talks about.
Yeah. And we are so underbuilt in that opening price point home.
Yep. We are. We really, really are. I think that's a really good point. So maybe a shift in some of the materials and shift in some of the need. Absolutely. Conversely, let's look at the remodeling side. So this is a forecast that we always look at, comes out quarterly from Harvard's Joint Center. They have a great model, and it looks at remodeling activity year over year growth. We'll see as we get into 2019, certainly much safer growth expectations on the remodeling side. And I would say our firm has been doing this stuff for 30 years in this industry. Time and time again, the remodeling side of the world fares better than the new housing side, certainly in downturns or any sort of maybe resets in the market. Okay, remodeling may never have the huge booms that new housing does, but certainly more stability. So as we think about opportunity, look at your all's business. What share is new? What share is existing? And I would encourage you all to have a pretty good balance in your portfolio. Okay. All right. Into the data that we collected. Again, this is all benchmarking information. It's national in scope, so we realize there's going to be some differences market to market. Feel free to contact me, contact Jay, contact Katie. Let's have some conversations maybe about some nuances we are seeing in your market, but also happy to dig deeper into your market to see what those nuances may be, right? In miles, what's the sales range? We've got about half that are doing, a range of 50 miles or less, about a third that are doing, 50 to 100 miles. Not as many in that really broad sweep. Okay. As far as competitors, was happy to see this. We're aware that we've got competition. This is good. 2% said they don't have any competitors. Not going to name names, but I think we're all very realistic. The fact that we've at least got, call it 5 to 9 competitors. Some maybe a little bit less, some maybe a little bit more. This includes big box, LBMs, et cetera. Okay. So we don't have our heads buried in the sand. That's good news. Where do we sell? I want to point out that at the bottom here of this list on the left-hand side is all of the above. So you can add those numbers in to showroom, right? Add them into in-home. You've got 60 to 80%, 90% that are using showrooms. So very common tool. And we see a little bit of difference with the window retailers, replacement dealers, where we've got, call it 80% going in home. So much different strategy, as we know, than some of the lumber yards or wholesalers, of course, with window retail being in home. Much different experience, much different opportunity by doing that, right? Right-hand side, I want you all to look at this very closely. What is your differentiator? What is your value proposition? Is it unique if you've got 70% all saying the same thing? I would say probably not. It doesn't mean it's wrong, but it means we need to start thinking about what quality means, what service means. I can tell you, in working with a number of manufacturers and retailers, the value proposition of just offering good service and good quality is table stakes these days. Experience right now is king. Whether that's with the homeowner, whether that's with the trade, experience is king. So what does service mean for your business, for your company? What does quality mean for your business, right? How is that truly a differentiator? It may be different from market to market. It may be different, heck, from product to product. Does service for you mean you resolve any issues or claims within 24 or 48 hours, right? Don't know, but think about pushing those definitions a lot further and getting finite with what you mean by service, what you mean by quality, to truly set you apart. Because if you're just relying on those two words in general, so is your competition.
Grant, and this is an area we're going to dig in a little deeper in this year's study to uncover quality and service, ultimately to serve the WDDA members.
Yeah.
So be really excited to see what some of these findings mean, so then you all can take and run with it and create a true differentiator amongst your competition and excel.
That's a great point, Jay. Yeah, it's gonna be fun to see what we learn. Okay, what are y'all selling? Jay, I think you mentioned it earlier, which is really valid. This vinyl component. Not only are they already carrying it, but there may be some opportunity down the road for vinyl to have more of a play given its price point. We do see some difference when we look at LBMs, and that's the lumber building material dealers. LBMs doing a little bit more wood. That's both on the window and the door side, which we'll see in a second. The right-hand side of this chart that we're looking at is what we consider share. Again, this may differ from market to market. It may look different for your business if you're focused on custom home builds. But in general, this is pretty well what we expect. We do, the Farnsworth Group does the market sizing work for an industry association as well that you all may have seen. This is very, very similar. Okay. So vinyl is still reigning king when it comes to share. And Jay, I think, again, you're probably onto something with the opportunity for it to remain pretty strong in the future, given our needs for affordable price points.
Mm-hmm.
Yeah. Doors, same question. So left-hand side, what types are you carrying? Right-hand side, what's the share of your business? We will see a little bit bigger of a disconnect here between, for this one, it's not vinyl, it's fiberglass. We've got 3/4 that are carrying fiberglass, yet it's only making up about 40% of their door sales. Okay, so a little bit more fragmented or even on door sales. Again, that right-hand side is the share picture. And as I mentioned earlier, LBMs are doing a little bit more wood than window dealers. Okay. Retail dollars. How much you doing in windows? How much you doing in doors? Again, y'all, this isn't true market sizing study, but we just want to get a sense of who we're talking to. May give you some context of where you fit, but we've got a pretty wide range. Couple ways to look at this data, and I know there's a lot of numbers and charts on the page. Hey, we're researchers. What do you expect, right? There's two ways to look at it. One is average, which is just what it is. It's the average from all the responses. You'll see the average is quite a bit higher than the median. Median being that middle answer. So out of 100 answers, what's answer number 50? I would probably use median as maybe a more accurate number. Why? Well, we oftentimes will have larger companies that can drive up that average, right? So all it takes is 5 or 10 companies doing 100 million each to really drive up that average. So the median may be more representative in this case. We can see windows, certainly more window sales for the dealers than the LBMs. Conversely, with the doors, the LBMs are doing much more on the door side than the dealers are. Okay, I don't think any big surprises here, but again, helps maybe put some context around where you fall, right? Again, good benchmark information. And this, I think, is very useful for you. I hope it's useful for you. Again, gives you some context to look at your own business. Did your overall sales in the last quarter, and again, this was done towards the end of last year, but did your overall sales increase, decrease, stay the same? We've got half that said they increased at least moderately, and another 12% said they increased greatly. Only about a third had some level of, a third basically stayed the same, with about 10% decreasing in some manner. So very few having a decrease in sales. Where do you fall? Right-hand side, do you expect your sales to increase, decrease, stay the same over the next 12 months? Almost everybody is expecting it to at least stay the same, if not increase. So again, where do you fall in that? And Jay, I'm assuming you're hearing the same thing as I am when we're on job sites and out at trade shows with confidence of some of these contractors and confidence of some of these business owners, right?
I sure am. And I think to the fact, this page right here, the Home Advisor Farnsworth Index, which is mirroring this positive sentiment. When you look at all these various trades, which we're tracking quarterly to understand how optimistic and positive they view the industries, measuring this builder confidence. This is extremely high. These guys feel good. And as we know, these trades are great indicators of what the industry's doing right now.
Right now, yep.
You think, they're oftentimes not great change agents. They're not forecasting, looking 5, 10 years out. But when they say what is happening right now, these folks are great at telling you what is happening today.
Yep, absolutely. And as Jay said, this is an index that we do with Home Advisor on a quarterly basis. This is from Q2. I almost didn't bother updating it because it's just so consistent over the last couple quarters. Business is good. We see contractors turning down jobs, right? If y'all are working with subs, I'm sure you're seeing some of the same things. It's hard to get them to answer a phone, return a call, show up on time. People are slammed, right? So right now, business is good. It seems that the common belief is that business is going to be good in the near term. What does it look like 2 years out from now? Not going there, but at least in the immediate future, it feels really, really solid. So again, these are barometers that you can use for your business. If you don't have the same sentiment, why is that? Because if you're looking at your colleague to the left, your colleague to the right, I can tell you that they are feeling positive. Okay. To that point, in the next 12 months, do you plan to add staff, decrease, or keep the same size? We've got a third that are planning to add staff. No one's looking to decrease. So again, this speaks to the confidence. This speaks to the ability to maintain business, if not grow it. Again, where do you fall in this spectrum? We'll continue to track this. As Jay said, we're going to be doing this each year now. So we'll continue to track this to see how it looks over time. But my gosh, y'all, things are really, really positive right now. There's a lot of business to be had and not enough labor to do it. If you're not thinking that way, look at the business and try to understand if there's something going on in your market, if there's something going on in your product mix. Are you faltering on the service expectation? Are you faltering on the quality expectation? Because again, if you're looking around the table at your other colleagues, they're feeling positive. You can almost bet on it. Okay. Percent of door sales coming from the following. We've got about half from the homeowner, the DIY, half from the trades. Okay. A little bit different of a mix when we look at remodelers in particular, maybe going more so to the LBM dealer. So here's where we talk about opportunity, right? So we looked at some of those metrics for the industry. We looked at some of the forecasts for the industry. Is there more opportunity on the existing home side? I would argue personally, I believe so, at least for the next couple of years. We see people staying in their home, yet they're maintaining equity. Okay, they're staying in their home longer. Existing home price points are still high, so it's harder to get into them. And as Jay mentioned, we're not building enough affordable homes. I think there's still going to be a good flat opportunity for new housing. But again, if you're expecting a 20% boost in your business because we're going to get this huge surge in new home construction, not feeling it. And I don't think the rest of the industry is feeling it either. Okay. So make sure you're thinking about that remodeling replacement side of the world just as much as you are new construction. Okay. All right. Wrapping up here. Told you we'd try to keep it around 30 minutes, hopefully not too far off. But as we look at the last few data points, have you had any specific product segments that exceeded sales expectations in the last quarter? Yes, we see some of that. Some of them are coming from the lumber yards where we've got some composite decking, some shower doors, other categories that otherwise window dealers maybe aren't carrying. Okay. Look at other products being installed. Are you selling things other than windows and doors? About half of the window dealers are. No surprise, almost all of the lumber yards are, but almost half the window dealers are selling products other than windows and doors. And what are those products? Well, it's lumber. Maybe some of those products that go around the window and on the shell of the home, other building materials, some of the hardware components, etc., siding, roofing. So I don't think any real big surprises on what some of those other products are. Again, I think this is opportunity as we think about what categories maybe to bundle in with window and door. You can see what certainly the market is reacting to. And if you are selling other products besides window and door, what portion of the business is coming from those other products? It's about half. So again, perhaps some opportunity to bring in some other product to help grow your business. Okay. And as we come to a conclusion, feel free to type in your questions in that chat window, and we'll make sure to answer them here because we'll be wrapping up pretty soon. Installation process. All right, let's talk about this labor thing again, right? So on the left-hand side, big difference when we look at lumber yards versus window dealers. Window dealers are offering that install. I would argue as we start thinking about some of the service components, this install one for the last couple of years has been pretty important. Why? We don't have labor. That's right. So it's harder to find subs, new or existing, to get the work done. So if your contractors can rely on you to do the install, to get that figured out, my gosh, you're going to be helping their business. And that is what a lot of contractors and trades are looking for today. Help me with my business. 12, 13 years ago, it was give me the cheapest product you have because I'm trying to stay alive. It's not that price isn't important today, but it's a different perspective. If you're able to turn down 1 out of 10 jobs because you're just too busy, you're not as price sensitive today. You're trying to keep your head afloat. And a lot of the trades are craftsmen, passionate about what they do, not necessarily great business people. So helping them with their business, helping them with the install process is a real strong service component that we've seen a lot of manufacturers and a lot of retailers cling on to, whether it's install or whether it's, apps that help them with delivery, whether it's, helping them manage customer communications, whatever the case may be. This idea around helping them with their business is extremely powerful right now, y'all.
Grant, on that note of helping with their business, a question just came in around in the next iteration of the research and report. Do you have any thoughts on what might be surprising trend or noticeable departure from last year's statistics?
Changes from last year. So you're asking me to forecast, Jay, and be a fortune teller for a minute?
Well, I mean, this question came in. I mean, I think it's part of that. I mean, obviously you study the industry exclusively. So curious on if there's any of the departure or surprises that you expect to see.
Yeah, I think we're going to see a set of optimistic views decline. I think those maybe that have experienced some pretty strong growth over the last 2 or 3 years. I think some folks are still going to have healthy business, but if that plateaus, I think that's going to translate into more unknown, maybe less optimism. I think we may see a shift in maybe some of the, as you mentioned, Jay, some of the materials being used and installed. I think we're going to have, again, as you mentioned already, Jay, some better definition around what service components, what quality components are really resonating. So I'm excited to see what happens over the next year, given some of the dynamics in the market that eventually do impact down to that contractor and dealer level.
I agree, and for me, it's less of that departure and more of digging in a little deeper to let's really identify what some of these differentiators are. So if that did not answer your question, please shoot me another private message. And everyone, if you have questions, either send them to me privately or to the overall group chat.
Good question.
Thanks for asking.
All right. Right-hand side, we look at training, right? So kind of still tying into this, installation labor, this whole thing. How do you currently train your installers? Infield on the job is still quite common. Not a big surprise with that. What we're seeing is more online availability, more online opportunity. We see a lot on the homeowner side and more on the contractor side, YouTube as a reference time and time again. In fact, I've heard multiple stories about contractors actually being on the job site, pulling up YouTube just to make sure that they're installing a product correctly. And it may not be looking at videos, but it's at least looking at maybe some of the product specs, installation specs, et cetera. So I think this is going to be one of those areas, Jay, maybe touching on your question that you asked, where we see a little bit of change year over year over year as far as where are the new trainees coming from and how are we training them?
Grant, it almost feels like you're spying on me as I'm doing my DIY projects, because that is seriously me. I'm out there with my phone, YouTubing it, saying, I know I can figure this out. And my wife's looking at me thinking like, all right, how long before we call somebody that really knows what they're doing?
That's right.
But yeah, YouTube definitely builds some confidence. And I have another question that came in too. So that's a big number of companies saying they don't need training. Does that mesh with other trades that we're researching?
It meshes with those specialty trades. So when we think about, the mechanicals, HVAC, plumbing, electrical, Yes, this is similar to what we would see with some of those specialty trades. Obviously, some of those require some certifications, different licensing, et cetera. But this idea of we know we need to train, and having different materials to train, is pretty common across the trades. It's becoming more and more common as the years go on. I would say we've seen a lot of manufacturers and now retailers starting to get in this training space, right? I think, as we look at historically how it was done, we had, whether it was actual trade schools or unions playing a big role for some of these trades. We lost a lot of that in the recession because no one was coming in. And so no one was coming in for 10 years. Some of those things and some of those processes almost died off. And now we've got, call it this, a new fresh generation of trade professionals that have a different savvy about them, right? They're used to just hopping online like you're doing for your DIY projects today. They're used to hopping online and finding an answer within 5 seconds. So I think we're trying to shift and realign with expectations of professionals that are now coming into our marketplace that we know we need to train. I think we're just all kind of, I don't want to say scrambling. I think we're all just being very conscious of what is the best method to train them. Does that answer the question? Hopefully.
Answers it from my perspective, but I didn't ask it. So anybody, if that didn't, please chime in for sure.
Keep firing away. Okay. Last, we'll touch on some brands. This is just, I would say it is what it is, y'all. Just to give you an idea, maybe this is helpful to understand, what your brand mix is or isn't. It aligns with what we'd expect. We know who the big players are. We know what the brand share leaders are. So this is in line with, again, what we would expect both from window dealers as well as LBMs. Andersen, certainly a big player as far as brands carried, more so on the LBM side, much more fragmented on the window dealer side. And this is a regional component as well, right? So we know there are regional players. We know there are more vinyl players. We know there are more wood players. So it's still somewhat of a fragmented industry, a little bit more consolidated when we think about the LBM, the lumberyard offerings, okay? Going to touch then on percentage of window sales by those brands. Similar story. So certainly those lumber yards have a good chunk that are going to Andersen. Window dealers, a little bit more fragmented. PGT, great company that's going to be heavier down in the Southeast, right, as opposed to other areas. So again, some regional components to this, but just thought we would ask some of these brand questions to see how it might align with some of your all's business. Okay, doors, same thing. So here's where we see some different brands at the top, ones we still expect, right? Maybe not as fragmented as the window category. Therma-Tru, Masonite, Geldwin, certainly holding some top spots, particularly with lumber yards. And then the share picture pretty similar as well, right? So Therma-Tru, Masonite, really, really dominant. Seeing Provia come on, certainly on the dealer side. Okay. With that, I'll summarize with some of the opportunities. Try to keep this positive because I think there are a lot of positive opportunities and certainly some good things to come in the near term. New residential as well as the existing residential markets remain strong. That multifamily has leveled off a little bit. Again, we're talking at a national level. Multifamily's leveled off, but may pick up again, certainly as affordability continues to be a conversation, right? Luxury homes, as I mentioned earlier, those have leveled off as well. So that may just change the product mix that you're seeing in your business. But just be mindful that certainly in some markets, the luxury home market really has slowed down. Remodels, on the other hand, may be more predictable. Again, nationally, we're seeing some real strong activity on the remodeling side. The forecast looks to be above flat, where it is maybe a little bit more flat on the new housing side. Both should be stable, at least for the next 12, 18 months is what we're hearing, what we're seeing, what we're feeling, okay? From a competitive standpoint, you have competitors, right? You're all using showrooms. Folks are using in-home differently. Online is becoming more of a channel. It is growing. maybe slowly, but it is growing. So be mindful of how you're thinking about that next medium with which to reach your customer, whether that is a homeowner, whether that's a builder. Is it for product purchases? Is it for product information? Is it pricing? I can tell you pricing and product information are always number 1 and 2 of why pros go online, either to your site or to a manufacturer. So how are you being a part of that online conversation? Because it is there and it's only going to get more important. And then from the competitive necessity, service and quality have to be there, right? If you think that is your value differentiator, you may need to define it a little bit better. How's that? You're not wrong, but how are you better defining that? We'll get into that in the next study, but I would encourage you and your teams to really think about, what do we mean by service? What do we mean by quality? How can we exploit that? What's truly different? Because if you just use them in aggregate, it's table stakes. Okay. Last couple points too. So, vinyl still remains strong. Would expect that to be strong going forward, particularly given our affordability needs on the housing side. And optimism is strong as well, not only with the contractors, but with your competitors. A lot of folks are expecting, at worst, their business to remain flat, but many are planning to hire up and grow. So if you're not, think about that business. Happy to chat about your market, ways to understand your business a little bit better. So don't hesitate to reach out to me, reach out to Jay. Love to chat about the industry, love to chat about your business. But more than anything, Katie, thank you. And thanks to the WDDA team. This is really, really exciting and happy to be a part of it. So thank you all for your time today.
Thank you.
Great. Thank you, everyone, for joining us. And again, thank you to Grant and Jay and the Farnsworth team for your hard work and insights. Of course, we're excited to continue this research. And again, those of you on the line can be among the first to hear the new data and year-over-year comparisons at Window and Door Dealer Day. That's taking place Monday, September 16th in Atlanta. And registration will open on April 25th. So plan to join us there. But thank you again for your time this afternoon and enjoy the rest of your day.